Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, February 17th, Friday. You may be wondering why did we sell off at the end of the day yesterday minus 1.63% after this irrational move that we got after PPI came way higher than expected. So we've been seeing all this price action, irrational price action, bullish, FOMO, hype, greed throughout all this week. But yesterday it was a little bit different. We were consolidating after this. Basically, we tackled the PPI, we sold off, we did a big reversal almost to the tick of the PPI top. And then we started consolidating here as you would expect on a bullish day. Pullbacks were met by demand. People were buying dips like crazy. First attempt of going higher got rejected, and another one. And we started to see this coiling pattern that is usually signs of accumulation or distribution. In this case, at this point, we sold off at 3 p.m. exactly into the close. So what really happened? There was no economic data, but there were a couple of Feds that were talking, and one of them, Fed Minister, said something very interesting that killed basically the overall bullish sentiment. And it's not that more rate hikes are coming, but she said, I saw compelling economic case for a 50 basis point increase. And that is what killed the market. People are expecting pricing in 25 basis points on March, but after all these CPI, retail sales, PPI, obviously, the incoming data have not changed her view that we will need to bring Fed funds rate above 5%. So that's a need. That's already decided, I think. And stock markets, I think, didn't price this thing either. Bonds market, as I was mentioning in yesterday's video, are pricing in this, but stock market basically is following on FOMO due to other things like options expirations today that I will comment on a little bit later. But first of all, she's confirming above 5%, 525, even 550. It's, according to some analysts, it's possible. So be careful with that. More hikes are coming, but people is expecting step by step 25 basis points each time, and 50 basis points. She's FOMC member, so she will put that on the table on March. And if that happens, if 50 basis points happen, that would be basically a disaster because no one is expecting that. 82% of analysts are expecting 25 basis points to go near that 5%, 475, 5%, and only 18% are expecting 525, so 50 basis points. If we check the probabilities, they didn't change according to what we reviewed yesterday, but they are already seeing that 525 is 55. Earlier this week it was 40, something like that. Now it's 55, almost 60, 50. So you have to be aware that 525, 550 interest rates are going to be a pain. Hell for households, consumers, small businesses, for everyone. So that's what she said, and that's what it killed the market, basically. And right now, for today, 3.5 million options are to be expired today. And that is a huge amount. That's why all this week we've seen this put wall that is not letting the market to go down. Wall Street don't want to pay all these huge puts, and that's why they are moving the market up. But today is the last day. Today they will expire. From now on, economic data will prevail. Fundamentals will take the opportunity for traders and investors to really short the market, because you can see, as you are seeing, CPI, retail sales, PPI, and now a member of FOMC, Fed Master, said that 50 basis points is starting to be a consideration. So be careful today, because irrational moves might happen, volatility might happen again, but we are, I think, in my opinion, we are going to see a lot of move to the downside. If we check what happened yesterday, then if we check overnight right now, let's change to the 5-minute. So basically, as always, I put my levels, settlement from yesterday, close, and we are slowly going down. There's no way I think we should recover prior close after all this news, but who knows? But my sentiment, my bias is to continue looking for shorts, because it's not only that markets are rejecting these levels. This is the Nasdaq daily. As you can see, big consolidating here. Nasdaq and the overall market are stacked in here due to options. But once that finishes, once today closes, market will be able to go lower as much as it wants. And that can be to this level, last week low, break that to 11,900. The other one, this is a nice bottoming tail, so maybe at this one, but you don't know where it's going to stop. What is clear to me, and I think for a lot of people in the bonds market, markets are willing to go down heavily. So be careful after today, because this is going to be key. This is 4-hour chart for Nasdaq, and as you can see, we tried to move higher. We got denied by this pivot and also for fundamentals, and then the big red candle at yesterday's close, that now we are under this trend line. So the first thing I'm waiting for is to break down this pivot that is exactly last week low. So last week low at 12,200 or 150, that area for me is key, because if we break that and we start seeing rejections, lower lows, that's already, the move to the downside has already started. Maybe today is not heavy due to options, as I mentioned, but be careful, because in the following weeks, next week, that is going to happen. Dollar is continuing to the upside. I will say it again, 105 is one of the targets that dollar is reaching, is targeting, and I think there's a lot of buying pressure, as you can see in these weeks. Dollar is about to push even higher, so a lot of people is starting to rotate to dollar due to higher and higher interest rates and the finish of earnings. 2-year yield, look at this, 1.16%, continuing higher. I expect it to be at 4.8. 10-year, 3.9. It already reached my target, my first target, but I think 4.1 is also on the table. It's just skyrocketing. Yields are pushing super hard. And look at this. This is one of my leading indicators, one of the strongest chart, that is the reason why I'm so bearish. This is September's interest rates futures. We got this pivot at 5.23 on November just last year, and since we start getting bad fundamentals, bad CPI, bad consumer retails, consumer spending, bad retail sales, bonds market are skyrocketing, and yields 5.30. It's basically what we are expecting from the Feds at the terminal rates in, I think, for this summer. September is this, but I mean, also happens on June, July. There are a lot of FOMC meetings. And I think once we reach 5+ interest rates, they will continue raising rates until 5.25. This is the reason why people are not sure if 5.25 will be enough or we will reach 5.50. But look at this, yields are in the green. Volatility index, VIX, just starting to push a little bit higher, gapping up right now, 2.43% in the overnight. All the tech stocks are red. That's why Nasdaq is suffering right now after yesterday. And if we check the 50-minute chart, it's quite bearish. It filled the gap basically yesterday. But you cannot only approach this kind of market from a technical standpoint. You have to also understand the options and the kind of manipulation that is going on. But once that is finished, prepare yourself, because fundamentals will take over and we can start applying some technicals with freedom. And look at this trend line. We are in between this area in which support might happen, but I think once we break down, there's a free fall of a lot of opportunity. There's like almost 12% of potential to the downside. And that's why I didn't want to buy at these levels, because the upside was very limited. We saw a lot of lower highs each time. And when we tried to go higher, we got rejected. So for me, the real potential of this situation, the real opportunity is to the downside. And now that we are about to finish these weeks of options manipulations, I mean, I will start going aggressive to the short side, and I'm going to short every pop. So that's my approach. SQQQ is super high, gapping up. Everything is red. The only thing that is green is bonds market, yields, and dollar. That obviously shows you how bad the economy is going to be in the upcoming months. And that's the reality. That's what you have to understand about this week. This is not that stock markets are just seeing something that you don't see. It's just pure manipulation due to options. So open your eyes, be careful today, and I think we'll have a lot of opportunities from starting next week to be bearish, because I think that's what the fundamentals and the data, the economic data, is telling us. So I just going to be patient, wait for that kind of pivot, price action to approach these levels, and I would like to see a reaction of not support, rejection, and then we can, with confidence, we can take those opportunities. So this is, I think today's, it's again going to be volatile as yesterday's. Discipline and risk management and patience are going to be super important today, the last day of this third week's option expirations. Remember, that is what is driving the market. So be patient. Don't take too much risk, but be smart and wait for the things that you like. And I would like for this prior close not to be broken out again, and for markets to start approaching this important pivot that I think is going to be key to open the downside. So that's my forecast. So as always, thank you for your time. If you find this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time as always, and see you in a couple of hours in the open and also at noon with the market update. Hopefully we can have a pretty nice day, and my forecast is helps you to understand the markets and be able to help you on taking those opportunities that I'm super sure that we will be getting. So be smart, be patient, and remember that discipline and risk management are key for success. Stay safe, everyone, and see you later.